Good morning. Welcome back to Passionate World Talk Radio Network, a wholly owned subsidiary of Global Media Network LLC. Educate, enlighten, entertain, and let's not forget mindfulness. And on today's program, I'm going to tell you, based on an article by Benjamin Preston, who writes for the Better Business Bureau and Consumer Reports, of how to save big on your car insurance, whether it's a car or a van. And we all know that insurance goes up, especially when you have kids, or more likely a teenager somewhere around the ages of 14, 15, 16, 17, and 18. And let's not forget the college years. So your insurance goes up, but it may be high anyway. And as you are like many of your neighbors, you watch them go up every year. The past 2 years have been a prime example of that. Why? Well, there's been a lot of litigation with car crashes and inflation, although that has cooled somewhat. But the average premium has increased by almost 19% more than it was a year before, which make it 2024, according to the Bureau of Labor Statistic. Now, the average premium price is up 26% to $2,543 since last year, according to bankrate.com, an online personal finance comparison platform. But in some states, people or drivers are experiencing even more pain, with the average annual premium in Florida, Louisiana, and New York well over $3,500. And listen up, folks, if you go and rent or lease an electric car, even when you buy a used electric car or a new electric car, you're going to pay a lot more in insurance premium than if you stick with oil, gas, or diesel. Among the 40,566 American policyholders surveyed by Consumer Reports earlier this year, 38% reported an increase of between $50 and $199 within the previous 12 months, and 22% said their annual premium had gone up $200 or more. So, how can you lower your premiums? Well, for starters, and consider these as tips, consider switching insurance companies. According to CR, short for Consumer Report, 2024 auto insurance survey, 30% of those surveyed had switched insurers in the past 5 years, most of them to save money on premiums. Those who did saw a median annual savings of $461. The survey also found that most policyholders were unaware that their insurance companies had automated driver monitoring programs available, usually through a smartphone-based tracking app. But those who signed up for it save a median of $120 on their annual premiums. So CR recommends shopping for better rates from company insurers every year or so, and at the same time review your policy to see how changes in your life may affect your insurance needs. Those changes might include moving to a new town or state, getting a new job, or retiring. So that's two tips. One is to switch companies, and two, your life may have changed, and that's going to affect how much you're going to pay. If you haven't given your insurance a hard look in a while, you could be paying too much nor have enough coverage, or both, said Chuck Bell, Consumer Reports Program Director for Advocacy. We'll tell you which life events might cause your insurance needs to change, as well as how you can get the lowest rates possible with the top insurers from CR's Consumer Reports 2024 Audio Insurance Survey. Number one, write it down. Increase your deductibles. How much can you save? From $464 to $525 a year. This timeless insurance advice or tip saves you money because you're increasing your potential out-of-pocket costs for repairs after a crash. Loretta Waters, Vice President of Media Relations for the Insurance Information Institute, says that increasing your deductible from $500 to $1,000 can bring your annual premiums down by 20 to 25% average. Just make sure you can afford to pay cash for your repairs if you need to. Bell stresses the average motorist doesn't file a claim more than about once every couple of decades, so your likelihood of having to shell out for crash damage is actually pretty low. Number two tip: drop collision and comprehensive insurance. How much can you save? About $1,165 a year. Collision insurance covers damage to your car if you're involved in a crash or if you're the victim of a hit and run. And comprehensive covers damage caused by acts of nature, such as a storm damage, vandalism, theft, fire, and more. As the years and miles pile up on your car, its value will decrease. Eventually, that lowers the value, and it may longer justify the expense of coverage that you're paying. As a general rule, when the premium is more than 10% of the car's value, it's time to consider dropping collision and maybe comprehensive too, Bell says. You may want to keep comprehensive a bit longer because it includes glass coverage, which is always nice to have if a rock hits your windshield and cracks it. But if you're scaling back to liability only coverage, make sure you have enough to protect yourself from having to pay out-of-pocket expenses for someone's property damage and medical expenses, or if you are found at fault in a crash. 3, take a defensive driving course. Now, I know that the AAAP offers them, especially discounts for older drivers, because older drivers seem to get into more crashes and problems than people below the age of 65. Some insurance companies will allow you to take a safe driving course to get a discount, although you have to take it again every few years to keep the discount active. In New York, for example, where insurance premiums cost nearly $30,700 per year, on average, motorists can receive a 10% discount after taking a state-approved defensive driving course. The course approved can cost about $25, takes 5 hours and 20 minutes to complete, and can be repeated every 3 years. Many other states have similar programs, although the prices vary. In Virginia, where the average cost of insurance is just over $2,000 per year. The course takes 8 hours and starts at $25. Number 4, if you drive under 10,000 miles a year, report your mileage. I bet you never considered that. How much can you save? About $116 a year. Most insurance companies include annual mileage in their pricing methodology, and lowering your miles can save you money, says Douglas Heller, Director of Insurance with the Consumer Federation of America. For instance, if you're driving less because of a change in your job location, you may qualify for a lower premium, especially if you're driving less than 10,000 miles per year. Some companies offer verified mileage programs where you can get even more savings by reporting your odometer reading on a regular basis. And I know that Pennsylvania now has something for elder drivers who drive less than 50 miles a week. So you ought to look into it and see whether you can save even more insurance. Number 5, bundle your auto coverage with your homeowner's insurance. How much can you save? $348 a year. Heller says that some companies offer discounts on annual premiums when you purchase both your home and auto policies from them. But he points out that everyone's situation is different, and while you might save money by bundling these two together, another might save money by buying each policy from a different company. The bottom line, bundling is worth looking into, but it's not a one-size-fits-all way to save on your premiums. 6, pay out of pocket for a one-car fender bender. How much can you save? $348 or more, depending on your driving record. If you're involved in a crash with another vehicle that results in property damage, many states require that you submit a collision report, and you must report a crash with injuries or death to the police. But if minor damage that doesn't involve another driver, such as scraping your bumper on a support column in a parking garage, paying out of pocket and not filing a claim could prevent a potential rate increase. Keep in mind that what seems like minor damage to a car equipped with safety features such as automatic emergency braking and blind spot warning could be far more expensive to repair than you think. So make sure you get a repair estimate before you decide to shoulder the financial burden on your own. 7, get an independent insurance agent. To make comparing coverage and premiums from several insurance companies easier, consult an independent agent. Unlike an agent who represents a single company, an independent agent represents a number of insurance companies, including they can offer you the best deal. Heller says insurance brokers are also independent, but he says they're more appropriate for businesses than for individual consumers. Number 8, considered a dividend policy. How much can you save with one? $116 or more. Amica and NJM, two of the top rated insurers, Consumer Report ratings, are among the companies that allow customers to choose between a traditional insurance policy and a dividend policy. A dividend policy may have higher premiums, but because policyholders own a stake in the company's investments, they could get money back in the form of dividend payments. In the case of Amica, that could be 5 to 20% depending on market fluctuations. Dividend policies can help reduce the overall cost of coverage and may help you save even more when both your auto and home are covered by the same mutual insurance company. 9. Sign up for driver monitoring. How much can you save? $931. Some insurance companies offer a discount if you allow them to monitor your driving habits with a smartphone app or a device that plugs into your car's diagnostic port. There's a potential for savings, but you have to be okay with giving up a certain amount of privacy, allowing your insurer to track your every move in much the same way that you do when using certain smartphone apps. If driver monitoring is available in your state and offered by your insurance company, decide whether or not it's right for you before you decide to use it. Bell suggests you do some fact finding before deciding whether it's right for you. Start by asking your insurer what data it will. Negative driving behavior has the potential to actually increase your rate, and how all the data collected can and will be used. Ask your insurer if they will sell or share your data with other companies before you agree to one of these programs. And if you tend to drive more at night because of work or some other reason, make sure you won't get dinged for it. Now, you're probably asking yourself how much liability coverage is enough. Insurance companies offer several types of coverage to protect you financially when you're involved in a crash, but the most important is liability coverage, which pays for costs related to the injury or death of passengers in another car, as well as damage to other vehicles and property. If it's determined that you were at fault in a crash, liability coverage also covers passengers in your car. Almost every state requires liability coverage. In Virginia, for example, the minimum coverage required by law is $30,000 per person and $60,000 per incident for bodily injury or death of two or more people, and $20,000 for property damage. This is usually stated on all insurance policy as 30,000 slash 60,000 slash 20,000, or simply 30, 60, 20s. Experts say most state minimum coverage requirements are woefully inadequate. Douglas Heller of the Consumer Federation of America cites as an example a driver covered only by Virginia's minimum requirement who causes a crash in which three people have $50,000 in medical bills per person. The driver's insurer will cover $20,000 of each injured person's medical bills, leaving the driver responsible for an outstanding bills, in this example, of $60,000. So make sure you figure out or ask somebody, call up Consumer Reports and ask how you would go about how much coverage is enough. Now, Loretta Waters of the Insurance Information Institute recommends a minimum liability coverage of 100,000 slash 300,000 slash 100,000. For more protections, experts recommend purchasing an umbrella insurance policy on top of higher limit liability coverage. An umbrella policy adds to a homeowner's policy, extends liability protection to $1 million or more, and depending on the insurer, fills whatever gaps may have been left by auto and homeowners policies. So ask about umbrella policies. If you want to secure more information about tips and the insurance for your car, go over to consumerreports.org and they have more on car insurance. See our car insurance ratings and buying guide. Best car insurance companies. Car insurance quote comparison websites save you time, but watch for privacy pitfalls. On buying car insurance, bigger isn't better. An electrical vehicle may cost more to insure than gasoline powered cars. So keep this all in mind when you're doing this. This program, Monday Tips with Lillian, is brought to you by Ruby.ai. Check us out at http:// with Lillian.com. It'll take you over to Ruby.ai. You can see the testimonials that have been placed there. Plus, you can take a demonstration of the software. It's all in there. Ruby AI is a complete and total package. And when you decide, sign up for a monthly subscription. You'll be delighted, as well as your kids, since it's been mandatory now that AI be taught in the school systems. Another company that also sponsor it is Conscious Research Solutions. Check us out at passionworldtalkradio.com/research made simple blog. It tells you all the pain points one experiences when trying to do research. And there's a 4-part article telling you how to do research if you've never done it. It's a bit different than what it was even 5 years ago. So check us out. Also, if you want these type of resources, tips, and information, please consider donating to our station at passionworldtalkradio.com/donation. Thank you very much. And if you want to see the video all over again, go over to passionworldtalkradio.com, scroll down to State of Current Affairs, click on it. It'll take you to a page. Click on the Google link, and it'll take you into the belly of the beast, which is known as YouTube, and you can watch all the videos and all the Monday tips until you're caught up to date. Thank you very much for joining us today, and remember, have an awesome week.